Before we start the video, I want you to subscribe to the best Telegram channel at the first link in the description, where we show our earnings on cryptocurrencies, and not only, our capital that we manage is more than $3 million. Here you will find only the most useful. Thanks for subscribing. Also in the description is a links to verified exchangers, when you register on which, you get a welcome bonus from me. Let's get to the video. A week and a half ago, on January 12th, the Consumer Price Index was released, showing that record inflation in the USA had begun to decline at a higher rate, and it was the most significant event at the beginning of the year. After all, after 12 months of a tough bear market, we finally saw Bitcoin show a long-awaited rise from $17,000 to $21,000, literally in 1 week. And despite various opinions that this growth isn't real, everyone is about to get shaved off, nothing of the sort has happened. So far, after this growth, Bitcoin was able to break out above 20,000, where it found support and confidently traded above this level for the whole week. But if I tell you, the CPI was just a light warm-up for what is to come in 10 days, because it will be February 1st that the market will completely change its game. On that day, Jerome Powell must make the most important decision of the year and decide the fate of the USA economy. On February 1st, the long-awaited interest rate will be announced. It will be the first meeting of the Fed this year, and you have no idea how significant this event will be for all markets. The Fed's main goal is to bring down inflation, and judging by past CPI reports, they are succeeding. Because of that, everyone thinks they will only raise the rate by 0.25%, and if that does happen, the market will get ready to fly even higher. But there's one catch. A rate hike always leads to a decline in the economy, after which there can be such a thing as a recession, and it can ruin all of our plans for growth. So in this video you will find out if Bitcoin will go to 18,000, what the Fed is preparing for us at its meeting on February 1st, and if they will lower the interest rates, what will happen to crypto in the near future and how to earn on it. Before you watch the video, please like it, and by doing so you support our channel and speed up the release of new interesting videos. Enjoy watching. Let's get started. Hello everyone, you are on the Cryptanic channel. Today's video, we tried to make for you in advance, 10 days before the announcement of interest rates. During this time, you will have time to prepare, to analyze the situation as much as possible, and you will be able to take a right decision of trading. After all, you know, if we had released a video a couple of days before the rates decision, you could have made a lot of rash actions that could have led to dire consequences. After all, the day would be very important, especially if you saw what happened after the CPI. But, because we are doing the video for you much earlier, unfortunately, we can't fully take into account the various financial reports that will be released next week. The most important one is the GDP for Q4 2022, which will be released on January 26. After all, it is the one that will help us understand how close USA is to a recession. So if the GDP is going to have a big impact on the upcoming rate decision, you can find out about it in our Telegram channel, at the link in the description. There, we're 24/7 and keep you updated daily on all the latest developments, so be sure to subscribe, so you won't miss anything. Now, let's take a look at what Powell has in store for us on February 1st. To begin with, investors are quite optimistic about this day, because even though the Fed still considers inflation to be a serious problem, looking at the markets you wouldn't say so, and all thanks to the CPI, which showed that inflation started falling, after which investors started to think that the Fed will start cutting its rates. This investor sentiment can be gauged thanks to the group media data, which showed an almost 100% probability that February rates should increase no more than 0.25%. In addition to the CPI, we could be pleased with other important reports such as the Producer Price Index, which fell 0.5% in December. Also, retail sales managed to drop 1.1%. These numbers also indicate that the economy is slowing, prices are falling, and Powell's plan is working. After all, inflation is coming down. These results may indeed cause the Fed to raise the rate by 0.25%, but I'll remind you, in December 2022, the Fed indicated that rates would probably exceed 5% in 2023, and they would remain at that level, and there would probably not be a decrease until at least 2024. The truth is that the situation has now changed dramatically. The markets believe that we are likely to see a 0.25% increase not only in February, but also in March, which would be the end of the increase cycle. And by the end of 2023, they will probably be lowered, except that there are 2 points of contention between investors' views and the Fed's forecasts. First, as I said, the Fed sees rates at 5% by the end of 2023. Yes, it's possible, because even Federal Reserve Bank President Jim Bullitt, a couple of days ago said that his interest rate forecast is in the range of 5.25% to 5.5% at the end of 2023. The same view is held by Fed Vice President Lyle Brainerd, who is set to increase rates despite lower inflation. After all, another important factor the Fed considers when raising rates is the labor market. Right now, unemployment remains low, but for Powell, it's important that the rate goes up to 4.6%, which would result in the loss of over 1 million jobs, and the rate will go up until they achieve that. Admittedly, investors don't really agree with that. From that comes the second question, which is, will we see an interest rate cut this year? On that point, at the December meeting, no policymaker mentioned a cut in 2023, but after the January 12 CPI and other positive reports, Powell clearly has his hands itching to make the first cut as early as this year. Nevertheless, both the Fed and investors understand that the rate will be raised to 0.50 or 0.25% at the first meeting. As for the rates that will be announced in March, May, and summer, it remains a mystery, but the markets assume that they should remain stable. With no hikes, well, starting in November, there is a little hope that we will see the first cut. Of course, the Fed and the markets will react to new reports that make clear where the economy stands, but the markets expect inflation figures and other data to continue to convince the Fed that inflation is returning to the 2% target. Actually, this sentiment allows investors to expect further growth with more confidence, and they don't think the markets will roll back to their bottom. And looking at the Bitcoin chart, you can see how investors are looking forward to the 1st of February to continue to actively move up. And, in February, we'll see a good move that we can capitalize on, just like we did after the CPI. But, if you don't know how to do that, join a Cryptanic subscription. Subscription allows absolutely everyone, every day to receive the high-quality and professional analysis of the market from analysts. Cryptanic. After the 12th of January, the participants managed to close many profitable deals, and right now we are already starting to prepare the profitable analytics for the 1st of February, because, believe me, that is the date every trader marked in his calendar to earn on the next week, which will be very volatile. At this time, crypto can really show high percentages of growth, so don't miss this opportunity, but follow the link in the description, join a subscription and earn with us on upcoming events. We have dealt with inflation and interest rates. Now we understand that the Fed is moving in the right direction and managing to keep inflation under control. But you might be wondering why Powell is fiddling with these rates every month. Couldn't they have raised them to 5% back in the summer and not suffered? Of course you could, but if it were that easy, no one would pay attention to this inflation. Remember, I said that the Fed wants to see low economic and labor market activity, but such actions are very likely to lead to a recession, and believe me, a recession is much worse than inflation, because the whole economy slows down completely. This can easily be understood with the example of unemployment. Before you are a short list of recessions that have occurred in the USA, simple math tells us that a 1% increase in the unemployment rate represents a net loss, almost 1,500,000 jobs, in 1 year, resulting in a recession. This is also true of the retail sales figure, which was below expectations. And if sales are down, then production is down, which affects the number of jobs. It's like a chain in which each link plays an important role. So because of such ambiguous data published on Wednesday, the U.S. stock market, unlike cryptocurrency, reacted with a fall. After all, investors are afraid that future Fed rate hikes may send the USA into recession. On this subject, everyone's famous Elon Musk constantly tweeted and warned that a recession would be inevitable if the Fed kept raising rates, and frankly, his attitude towards the Fed is not the best. Actually, it's clear why he's doing it. he's a businessman, and as I said before, nothing can be worse for business than a rate hike. And according to the chief economist of the USA, Stephen Blitz, the latest USA economic data points to a rapid decline in economic activity and an impending recession. Stephen Blitz said that a recent survey of companies in the economic sector by the Fed showed that most of the companies said that they do not expect active earnings growth, so at this point, investors will naturally take recession into account before continuing to invest in crypto. Now that we have all sorts of economic data in hand, we can move on to cryptocurrency and break down where the market will move before and after February 1st. Since our last video in which we analyzed Bitcoin, the price has moved as we said it would, because Bitcoin has found solid support levels above $20,000, where it has been trading all along, and it even managed to break out above $22,000. But there are other things to watch out for. Despite the slight decline on January 18th when the CPI was published, there were many call options on Bitcoin the other day from February 3rd to February 23rd. This indicates that traders are looking to profit from three important events, such as the Personal Consumer Spending Index on January 27th, the Fed's interest rate decision on February 1st, and the Federal Open Market Committee minutes on February 23rd. In simple terms, a call option is a tool that allows traders to sell assets at a predetermined price. So, a call option of 2050 bitcoins, with an expiration date of February 3 at a price of $28,000, appeared and was noted by many crypto traders on Jan. 19. Also, there are several options that are above $22,000. Bitcoin options play an important role in the market. After the calculation, at the end of 2022, in just 1 month, open interest in Bitcoin options has recovered by more than 80%. Bitcoin options have a lot of metrics that give an idea of what most market participants are doing and expecting, and so, there are a lot of investors now anticipating the Bitcoin levels that I just talked about. Right now, the market has steadily moved into a bullish phase, and there's a lot more positive sentiment than there is negative sentiment. In fact, even the bankruptcy of crypto lender Genesis, which we wrote about in our Telegram channel, did not affect the market in any way, although I would not ignore this event, because everything can change at any moment. Regarding February 1st, investors are also expecting a rise if we see a 0.25% increase. As Fed Chairman Waller said the other day, this will only be a plus for all markets. Personally, I am more optimistic about the next month, as crypto is clearly getting ready to show growth again, so now might be the best time to buy those coins that you were planning to add to your portfolio. But the picture will be even clearer with new financial reports coming out next week, which you can follow on our Telegram channel. So, subscribe. To those who have watched the clip to the end, thank you very much. Please leave your opinion in comments. Will Bitcoin grow and will you add some Bitcoins to your portfolio? Do not forget to click on the bell, and as always, see you in the next video. See you all.